Houston right now, walking our new 56-unit crazy property here. It starts down there.
We got a lot of billion-dollar man.
Elliot Horowitz. Here he is. Equities, the man himself. The legend has it you have never left Brooklyn, New York.
That's partially true. You know, I try to stay in my little bat cave in Brooklyn and run the show from there. But sometimes for special events like today, we make it our business to leave.
You make it out of the bat cave.
We make it out of the bat cave.
I read on your website you did $700 million in equity investments and deals over the past couple of years. I don't know how many years, but is that true, Elliot?
So yes, so we've been invested in about, I think it's over $1 billion of transactions at this point. We have a debt business, an equity business. We invest in multifamily properties in a variety of states around the country. We invest in medical office properties. And then we have a debt business where we lend senior financing, mezzanine loan financing, and preferred equity.
Okay. So you're a big landlord, Elliot.
Small enough. I got small pieces of a big pie, and it's good to have.
What type of properties are you buying?
So we have the apartment buildings are in New York, New Jersey, Atlanta, North Carolina, and Philadelphia. Those are very long-term investments. And then we have medical office properties we started buying about a year ago with another operator, a good friend of ours. And we own now 7 medical office properties in New Jersey. And we're looking for more. Always looking for more.
Wait a second. Jersey, Philadelphia, Atlanta. That doesn't sound very Brooklynish to me.
It's not. I don't go. Right. That's the thing. I don't get to go to these properties. That's just it. I'm in the back cave, right? So the operators operate. They do their job. They send their teams out. And then we come in as investors once we fully vetted what they're telling us. And it's a great business model for me. I get to see a lot of different operators operate. I get to transact with them, those who I know, like, and trust. And I know they have their own money in the deals. They have their own reputations on the line. It's not just me putting in all the money. They're putting in substantial equity as well in most cases. And it's a good symbiotic relationship.
Yeah. So I've heard about you that you're very conservative. You do great deals, and you lend at pretty high rates. I don't know which is true, which is not. This is all word of mouth. I know we've tried to do deals in the past before, and we haven't. But is that true? Like, where does this stem from?
So I am very conservative. I'm afraid to lose 5 cents. So that helps me. When I look at a deal, I always try to figure out how can things go wrong, right? So when we buy apartment buildings, even medical office, we're typically very moderately levered with long-term financing. So that alleviates a lot of the risk, right? So when you're high levered, you run into risk of what we're seeing now, where rates have gone up a lot, and now you can't refi your money out. So it's a challenge. So we are very conservative. With the lending, we've lent at very high rates. We've lent at very low rates. And what I found out is there are very experienced, knowledgeable borrowers who are very sophisticated, who can make a deal work at 10%, 12%, even 15%. They have an angle. They have the skills. They know how to figure it out. And then there are borrowers, you can lend them at 3%, and they can't figure it out. So it's not necessarily, the rate doesn't necessarily dictate risk. The risk is in the operation, how the operator operates. The rate is a function of what capital is worth at that moment in time to the operator.
That is such a lender thing to say right there.
Well, thank you.
You are a lender, my friend.
Right.
Yeah,
Thank
you
you.
didn't it?
We look at it as, can this guy execute? Great. What's he looking for? Excellent, right? And we just try to figure out what the appropriate level of risk is for that particular transaction with that borrower's needs and what it should be priced at that moment of the cycle. And this moment of the cycle, rates are definitely higher.
Okay. And right before the podcast started, you told me you had 5 kids. One of the son-in-laws was named Alon.
That's correct.
And what took me by surprise is son-in-law. I'm turned 27 in a couple days, and you are
56.
You're a young guy.
56. Yeah, 56 years young. Yeah. So we
You have 5 kids?
I have 5 kids. 5 kids, 4 grandchildren, thank God, 1 on the way. So I met my wife when she was 15 and I was 19. We got married at 18 and 22. Had our first child 12 months later, not 9 months, but 12 months later.
9 months later.
12 months
Ellie,
it was. I'm telling you, I got the birth certificate. And 34 years later, here we are. Here we are, 5 grown children, adult children, 3 sons-in-law, 3 married daughters, 3 sons-in-law, 2 single sons. One's 30, one's 18. They'll get married when they get married. And I got 3 granddaughters, a grandson, and a player to be named later in April, God willing.
Wow, that's beautiful.
It's amazing.
That's a big family.
Yeah, thank God. It's amazing.
I really hope my parents are not listening to this podcast.
They're going to come after you to get married,
Yeah,
right?
I'm 27. No girlfriend now. No.
Alon, it's time. It's time. Right?
Alon.
Aloni, maze.
Yeah, every cultural, like family is really deep rooted. Oh, and Moroccans. Let me not forget.
So you're really in trouble.
Oh, I get it.
You're in trouble. You better get married soon, man.
Alon, 27 when I was your age. I had 3 kids already.
You want your mother off your back, I'm sure. Right?
Yeah. More so my father. My mom's like, it'll happen. You don't have a clock. It's okay.
Okay, good.
My dad, what is wrong with you, kid?
Do it already. Right?
Yeah.
I'm sure you'll make your parents happy one day.
Oh,
everything good comes in its time. Everything good comes in its time. That's what I've learned over. Given the benefit of looking back in time now, I've learned that everything happens in its own time.
Well said. Well said. You've been through a lot of the cycles then. Is this what you started in, the real estate business?
No, I was a stockbroker and trader for many years up until around the year 2004 or 5. I left that business, didn't really have a direction at that point in time. So I said, what, let me get into the real estate business. I knew nothing, or I knew a lot of people in the real estate business. But it took me time to figure out what I was trying to do. First I was a mortgage broker, and that was good. Then I became a lender at a bank, and that was good. Then the bank let me go. They had cutbacks, so goodbye, Elliot. Then I said, what am I going to do? So let me start my own business. Great. That's a great idea, right? I'm 50 years old. Start your own business, right? So I did, right? And found some great business partners, some great investors, and thankfully it's worked out.
Do you have a business partner now, or is it just many JV equity partners?
I have many JV equity partners. I have many different operating partners. What I like to do is, the way I've structured the business is I like to invest with a variety of people. Why? Because different people are doing different things, right? Different people have different perspectives. And it gives me and my investors and I sort of diversity in asset classes, diversity in sponsorship. So I have like an equity partner who I think funds a good portion of our transactions, sometimes half, sometimes more.
Okay, so you have an equity partner.
I have an equity partner, and then I have a lot of investors who come in with us. We have an equity partner for equity, an equity partner for the debt investments. So I sort of have branched out where it's like I'm able to tap different sources of capital for different transactions because not everything fits everybody.
Yeah.
Not everybody wants to be in everything, no matter how much money they have. Not anybody, but we have, thankfully, a variety of operators, most of whom I know for quite a long time. So it wasn't like I have to get to know these people. I know them. I know their parents in some cases, sometimes their grandparents in some cases, right? So it was a good way to get involved in people who are actually executing, because what I found is I didn't want to be a day-to-day operator. I wanted to be the investor. So I ran the business around that mindset of being the investor.
Your biggest equity investor has how much money with you?
It's a great question. Probably $10 million.
Okay.
And I have a couple of those guys, 10, 7, 6.
Yeah. Me too. That's my biggest equity investor. It's around $10 million.
That's a good number for a guy. It's like a lot of money. People forget it's a lot of money, right?
It's a ton of money.
$100,000 is a lot of money, right? But $10 million is a lot of money. It's spread out over a variety of investments.
You see, it's funny you say that because it's 100,000. It's a lot of money, but then again, it's not. In the business we're in the markets we're in, it's not going to get you far at all.
It won't get you far, but depending who's giving the money, right? Meaning 100,000 could be a ton of money to somebody, but a little money to somebody else, right? So it's just, and 10 million could be a lot of money to somebody and a rounding error to somebody else, right? So all money to me is important. We have investors of all, shapes and sizes, but the main investors are, of course, of the larger transaction set. Most of our deals have been equity checks between $2 and $10 million, and that's funded, from a variety of high net worth investors, whether it's a debt deal or an equity deal. And most of them are repeat investors. And I would say 90% of them are people that I know 20, 30, 40 years in some cases.
When Bob Knackle was on the show, he said one transaction that he had going on, somebody walked away from $10 million.
I heard that. I saw that on your podcast, on the Instagram.
Crazy, right?
It's crazy. So that $10 million investor, I'm always wondering, was it his money? Was it a group of people's money? But that $10 million might have been a ton of money to him, or it might have been a rounding error.
He said it was a rounding error, basically.
Oh, wow, that's a lot of money. That's a lot of money for a rounding error.
He said it wasn't a very big deal.
It was the very big deal.
No, it was not.
He walked on 10 million. It wasn't a big deal. Wow,
Yeah.
Amazing.
I want to know who that guy is.
Yeah, he won't tell you. That's a nice rounding error. Look, most people can't afford to do
That guy has tight lips. He won't say a word.
Yeah, well, right, he can't. He has his confidentiality with his buyer.
And he's a good broker.
He's a great broker.
Loose lips sink ships. He
He's a
is
great
not
broker.
letting out a word.
He created a model that people try to replicate and probably have replicated, but he and his partners were the first, and they created an amazing business. what they did territory by territory, block by block. They created an amazing business doing that, 25, whatever years ago.
Yeah, before my time.
You're right. You weren't born. You were just born, right?
I'm also not a city guy, so to me, seeing these price per foots and all this stuff, it's crazy to me. It's crazy.
Yeah, it takes some getting used to. Look, many years ago, like 6 or 7 years ago, our business was centered 100% on Brooklyn. 100% Brooklyn. I drove every block, north, south, east, and west of Bushwick, Bed-Stuy, Greenpoint, Cobble, all northern Brooklyn. I drove every single block up and down, side by side, right? And over time, we expanded out. So Brooklyn metrics are different than New Jersey metrics, which are different than Atlanta metrics. Manhattan metrics were off the charts for quite a long time anyway. But a lot of people have made a lot of money in Manhattan specifically. We have one building we bought in Manhattan on the Upper West Side. We have 18 we own in the Bronx, which is not Manhattan, but we expanded out of Brooklyn into Manhattan, into the Bronx. Most of those have rent-stabilized components to them today, which are very challenging, challenging. But we expanded out because I realized that everything was like a 3 cap at some point in time in Brooklyn. It became impossible for me to make money. It became very difficult. So I took an approach where we're lending, but if we want to buy, we have to find other states to invest in. And we were lucky enough to know enough people that we could tap them, say, look, I want to expand, bring me deals, and they did. And we were lucky enough to buy it in, like I said, New Jersey, Atlanta, North Carolina, Philadelphia. And it's worked out, thankfully, nicely.
So now you've simmered down on Brooklyn and Manhattan, and you're primarily out of state.
Primarily out of state. We made a loan in Brooklyn recently, and in Bushwick back in July. We're closing another loan, I think, tomorrow, hopefully, in Brooklyn. So I'm not adverse to transacting in Brooklyn, particularly on the lending side, because it's a little easier from a basis standpoint. I would love to buy things in Brooklyn. I think it'd be great. Manhattan, not as much necessarily.
Maybe then you could go see them.
Maybe I can go see them, exactly. I can leave my bat cave like I did today. I think my partner calls them my Mossad headquarters because I have all these monitors and screens and whatnot and laptops. But
oh, you're one of like the 4-screen guys?
So I have these 2 big curved monitors, one on top of another. They're very big. I don't know how big they are, but they're big, 2 big on top. I have a laptop sitting next to me. Got the phone here, the big lights on everything, almost like your studio almost, right? But
wow.
I have a lot. I look at a lot. I look at a lot during the course of a day, so I like to keep it all in front of me. But if we ended up, I would do more in Brooklyn. I just can't find the right deal that I want to do, other than lending case by case.
I see. And are you lending a lot in the condo market?
The loan we're closing hopefully tomorrow is a preferred equity investment in the condo development.
Bezrat Hashem.
Bezrat Hashem is right. So hopefully we'll get there. It's a great borrower, great sponsor, brilliant developer. And I think hopefully tomorrow we'll have a nice closing. If not tomorrow, it'll be Friday.
What's that? What's the interest on that?
High. It's a good rate. I don't want to speak specifically about this particular rate, but it's an equity-like return with a debt-like level, and we are happy to be in the deal. We're happy to be in the deal.
Tell me. You got to tell us the interest.
I don't want to. It's not nice. It's not nice. I don't because the thing is, to the borrower, it might be sensitive. Right?
Okay.
To the borrower, it might be sensitive. But I can tell you, in general, rates today, no matter what we're doing, are significantly better than just 9 months ago even. Rates started going up last March, April, so rates were still low for bridge lenders or whatnot, but the rates, generally speaking, on everything we're quoting today is significantly better, higher than a year ago.
12s to 14s?
Yeah, they're high. Sometimes the current pay, sometimes the crude pay.
Elliot.
I can't get you to the whole number. As much I met you, I love you, I can't get you to the whole number. I'd like to. I can't. I just can't. Just like Bob Knackel has to, keep his lips. I have to sort of, do the same. But it works for the sponsor. It works for the deal, and it works for us. It works for everybody. So since it works for everybody, that's what makes it a good deal.
Loose lips sink
ships. Loose lips sink ships. It does. It does.
I'll change course for a second.
Go ahead.
Before you walked in, I looked at your Instagram briefly, and I noticed you're a big supporter of Israel.
Love Israel. Big fan. I'm a big fan. So I've always had this love for Israel. I went to, I grew up in yeshiva education, Yeshiva Flatbush, where we learned about Israel, always was in the forefront of everything. My son served in the Israeli army.
Oh, wow.
Many years back. I'm very proud of that. And we've always had this, love for the motherland, right? So I think it's good to support the country. It's an amazing creation, an amazing miracle, the country that sits there in the Middle East. What's not to like?
Yeah, a lot of superstars coming out of Israel.
There are. Oh, you Bar Rafael? Is that who you're talking about? Like which
No,
one?
talking about, I was talking business in general,
Oh,
but
yeah,
I see where your
business.
head's at. I see where your head's at, Elliot.
You said superstars.
Married 34 years.
30
You're
Nobody loves their wife more than I do. You can put that on the video, on tape. Judith, I hope you're listening, honey.
What's her name?
Judith.
Judith. She's not Israeli.
Not Israeli, no. Her mother was Israeli, no.
Oh, fantastic.
Mother was. She was born here.
Do you guys speak Hebrew?
We speak it. I don't speak it as well as I might have years ago. Fluently, we can get by, but not maybe, like the language today became very rapid, very quick, very slangy. I learned the old school Hebrew, nice and slow and dull, right? But day by day, I can kind of get by. Not perfectly, but kind of get by.
And you went to yeshiva. So are you religious?
So yes, so you can define religious by being a lot of things, right?
Of course.
But yes, but we are, I would say, modern Orthodox.
Okay.
Modern Orthodox.
Any of the kids became religious?
Modern Orthodox
Got
across
it.
the board.
Which is great.
It's great.
Great.
I think everyone should do their own thing. We have a wonderful family. Everyone does their thing. All good people, good Jews, and it's great. You know?
That's what matters. The
It is what
religion
matters.
could get construed in so many ways.
Right. So we have a wonderful religion. All religions are great. They're all great, right? So, but everyone has to have their own little way of doing things, the way it works for them, peacefully. Benachat, right? Peacefully, right? Calmly, peacefully.
I'm working with some Hasidics right now, Elliot, and it's my first rodeo with the Hasidic community. So, of course, it is a rodeo. Don't get me wrong. It's a different planet that I'm getting accustomed to. And they made us sign paperwork that we cannot work on Shabbat. Now, mind you, I don't work on Shabbat
Okay, that's good.
anyway.
That's good.
But all these vendors that we're working with, that I've worked with in the past, are signing paperwork that says Saturday clause. You cannot work on Saturday. Or
That's interesting.
I've never seen anything like it.
It's interesting. Well, look, I know I don't work on Saturday either, right? And I'd say all religious people, quote unquote religious, don't work on Saturday either. Some of them prefer their vendors not to work on Shabbat on Saturday, and there's sound reasoning for that. There's reasoning for that.
Yeah, but it's cool.
It's good. Look, you have to have your principles, right? So you have to have something in life where you have nothing, right? So if you have some standing, some principles, something, you can work on it, and they have a valid reason. They believe that their luck, their mazal, comes from not working on Shabbat, not having their vendors work. It's like the electronics store. I can't think of it now. I think it's on 9th Avenue.
I know which one you're talking
BH
about.
Photo, I think it's called. Not only are they closed Friday night, they close Saturday. They closed all the holidays. Their website is shut down on all those days as well. Who shuts their website down when there's no quote unquote work involved?
Yeah.
Right? They have this belief that they should do that, and they stand by it, and I admire it, actually.
Yeah, and they're extremely busy.
Extremely busy. Christmas week, they close Friday night early. They shut their website down. Unheard of. But you have to admire that, right? Because they really believe that they're doing the right thing, and it works for them. And I think it's great.
I do too.
I think it's great.
I do too. That's well said. Very well said.
Thank you.
What is the biggest deal you've taken down?
So the largest transaction we closed in my business in the last 7 years as we bought a building in Hackensack called The View with our New Jersey partners and my partner. And that was a $36 million transaction. It's a Class A 77-unit apartment building, beautiful building, about 5 years old, beautiful building. We paid $36 million, and I think we assumed a loan of, forget the exact number, 27-ish million. We put about $9-10 million into that deal.
Wow. So all in, you're in for that for like 400 a door almost.
Something like that. Class A building, beautiful building.
More than that,
Great
yeah.
town. You did the quick math. I couldn't do that. But whatever you say the number is, it probably is, right? But we just bought a building, medical office for $22.5 million. We closed that in October.
And now, will you buy a deal just by yourself? Elliot Horowitz buys the deal.
I don't operate. No, I always want to invest with an operator because I don't want to do the day-to-day. It's not my thing. I like to invest with people who are operating, who are day-to-day, who are on top of it, who will deal with the tenants, deal with the plumber, deal with the electricians. I don't want to be involved. Right?
So strictly passive. That's how your investment motto.
Strictly passive, except every month I speak with my partners who are operating. Every week, sometimes if there are issues we have to deal with. But on the day-to-day, I don't get involved. Every month we speak, every quarter we speak, we follow up on everything, the good, the bad, what's happening. But the day-to-day, rent checks and fixing the shower heads, and it's just not my thing.
Interesting. I don't think I've ever had anybody on that strictly is passive with any investment deals whatsoever. So that's a really nice take to hear. You know,
Thank you.
it's interesting.
Yeah, my strength is not operating day to day. Could I operate day to day? Yeah. So I want to know. I want to invest.
Has it ever not worked out for you?
Sure. Yeah, we've had a couple of doozies, right? So when you invest, you're going to have a lot of winners. You're going to have some things that are just what they should be, straight, easy returns. You'll have a lot of winners, and you're going to have some losses here and there. So we've had a couple of trades that haven't worked out. Primarily, they've been because of excessive cost overruns with construction work, adding new floors, city, stop work orders, which impossible to get lifted. So a couple of transactions have been not what we would have liked, to put it that way. So lesson learned is I'm trying to focus less on heavy lift type of transactions, more on light value add transactions. And that model's been working much better.
Any partners ever do wrong by you?
Thank God, no.
That's
Well,
huge.
do wrong by what? Meaning, did we lose money with somebody?
No, by you.
No, we've lost money, but no one's ever tried to get over on us, which is great.
And
Not that I know of anyway, but
Yeah.
no, nobody has. Nobody has. I'm very careful who we invest with, who we partner with. Typically, I know them a long time. That doesn't mean people can make mistakes, but we are always very sponsor driven, and the primary thing is reputation. For me, not just skills or how much money somebody makes. The primary thing is reputation more than anything.
And now, what are the repercussions of losing money with your company as a lender?
So as a lender, we've never lost any money, right? So as a lender, we've had 100% payoff, 100% collections. We've had some defaults, which were all resolved amicably, because as a lender, you're going to have some defaults, right? There's no way around it, right?
Yeah.
So you're going to make a loan. One default lasted 3 months, not the end of the world, right? One lasted a year, not the end of the world. It was a repeat borrower. We had an issue. We worked through the issue together. One loan defaulted 3 times over 3 years, So, but either way, it always thankfully resolved amicably. On the equity side, we've had a couple of transactions where we've lost money because, everyone loses money. Most people don't want to admit to it, but literally everybody has to lose money at some point because you can't go, you can't bat 1,000. It's virtually impossible, right? So in those transactions, sometimes there were capital calls, more capital calls, and they were typically because the construction work kept going over and over and over. Sometimes because of human error. What are you going to do? Sometimes because things got shipped late. What are you going to do? And sometimes because the city just doesn't come down to inspect in a expeditious manner. And that leads to more interest costs, more time delay, and more costs. So we've had a couple of transactions not go well. We've lost money for people. I hate losing money. No one wants to lose 5 cents. Worse than I can't help it. But when you have investors that are really investors who understand that sometimes you will lose money, most of them understand it. Some don't. But most real investors understand if there's been good faith and best efforts, it happens sometimes.
And what happens when that loss incurs to the operator?
In our case, typically they've also lost their own money and their family money, which is something that I look for. So I like when an operator has their own money in, and I like it even more when they have their family's money in, their mother, their cousin, their uncle, because they have something to lose. When you have operators who have, let's say, very little money in, and there's nothing wrong with having very little money in. Not everybody can afford to put a lot of money into a transaction, right? So there's nothing wrong with it. But some people will just crowdfund from anonymous sources around the country. Some people will just raise money from anybody for anything. And some people just don't care about their investors' money. And that's the truth, unfortunately. So I've been fortunate enough to invest with people who really care across the board. Everybody I've invested with really care about their own money, certainly, and their investor capital, which is important to me.
Super important.
Literally the most important thing.
Goes back to your roots of being conservative, understanding who you're partnering with. Seems like you've had a great track record of success with it.
We're grateful. We're grateful for it. Yeah, very grateful for it, actually. It's very easy for investments to go wrong consistently. And yes, a couple things do go wrong from time to time, but overall, it's mostly peaceful, as I like to call it, and pretty much smooth sailing.
I'm looking at a deal right now where I have to buy the business and the building. Obviously, I want the building, but I have to buy the business with it in order to get the building. You ever do a deal like that?
No. I looked at a car wash recently. We were going to buy car wash business and the building. It didn't work out.
Why not?
Because A, the price was too much. B, the financing was just way too expensive. So we got the price down, but then I think the financing, It just didn't work. I forget the exact terms. I think it started at 7%. It all of a sudden became 9%, but it just didn't work because for that cash flowing property, it just didn't work.
Yeah.
Now, if it was I think we had to get another $1 million off. I don't remember the exact numbers. If we had gotten that, it kind of would have worked pretty nicely because a very busy car wash.
Was it a business broker selling you the car wash?
It was a business broker, I believe. Yeah, it was a friend of mine was handling the transaction. A good friend of mine was handling it. And now it turns out he's trying to buy a few others, right, which is interesting.
Who is this?
I can't say that.
Oh, well, I asked
Well,
because one of my good friends is a huge business broker.
No, it's not a business broker. My friend sits in his house in New Jersey and just buys properties.
I guarantee they know each other then.
Could be. I don't even know the name of the business broker. My friend just he's an investor.
Okay.
He finds these quirky deals all over the place. I don't know how he does it, right? He has this knack for finding like the quirkiest of quirky.
Yeah.
And he executes. But so he said, hey, you want to buy a car wash from me? I said, sure. I jumped on it right away because it happens to be near something we own in multifamily. But are you buying? But you don't want the business. Is it a car? Like what kind of business is it? Is it a car wash, a restaurant?
Yeah, I have no interest in the businesses.
Interest. Right. Then you have to. Well, then you have to either bite the bullet or not. Right. If the real estate's that amazing, so here's what you do. If the real estate is that amazing and you're getting an amazing price for both, you just shut the business down and you put something else. You put a tenant, but the math has to work and it may not work.
Yeah, actually, I think I'm going to get very lucky with this because I have somebody that wants to buy the business from me, but at half the price I'm paying for it. So regardless, it lowers my basis substantially. I mean, what I'm buying the business for, it's quote unquote because I would pay the same price for the building.
Right.
So if the whole building was for that price, I would buy the business and the building for that price.
Would you leave him in as a tenant?
Of course.
That's excellent. So if that can reduce your basis and you're getting like what kind of cash flow would you get on that? Like what kind of return you think you'd get?
The problem is since I'm selling the business and lowering the basis, I have to give a favorable lease. Although it's not a problem, I think it's a solution. Actually, it's more so the solution because now my basis becomes low 100s per foot on a prime industrial building.
That's cheap. That sounds like it's cheap.
Yeah. Oh, very cheap. You're talking like sub 120 a foot for a building that could demand 18 a foot triple net.
So how big of a deal is that?
It's a $15 million deal.
Do you need a bridge loan?
What interest rates are we talking
I
about?
don't know. I think 10%, 12. I don't know.
It's a little steep.
It's a little steep.
After the podcast, or you know what? On the podcast,
are we negotiating now?
And it's all recorded, so you can't change your mind.
I can't. 15% then. Wait a minute. Did I say 10? No.
I think we'll settle at half of that, 7.5.
All right, 7.5 is good. Perfect. Can you pay me or can I pay you? No, look.
Didn't you just say 7 to 9% was a little high? I think that came from your mouth.
It did. For me, look, I want to be the lender who lends at a high rate. I have to be the borrower who borrows at a lower rate. But the thing is, even in our lender finance business now, if I'm lending at 11, I have to borrow at 8.5, 9. I used to lend at 9, borrow at 6. So
can you still borrow at 6? Will anyone lend to you at 6?
I mean, if you're getting a senior loan on a cash flowing property, yes. But like the lenders who lend to lenders, like there's some private lenders and some banks that actually lend to lenders, they used to all be, the banks were like 5.5%, 6%. The private guys were 6.5%, 7%. They're all 8%, 9% now or higher.
Wow.
So if I do a loan, let's say I close a loan at 11.
I feel like I just got stabbed.
But that's what it is, right? That's, prime rate was, what was prime rate a year ago?
7.75 right now.
It was 3.25 last March, I think. 3.25 last January, February, something like that. Now it's 7.75 and probably on its way to 8 or 8.5 in the next 6 months, probably, right? Yeah. So if I lend at 11 now or 11.5, I have to borrow, if I'm lucky, 8.5. I'm lucky 8.5, right? So it's a challenge.
The cycle.
That is the cycle.
No mercy with the cycle.
Nobody should be surprised interest rates are up. Right?
Agreed.
In other words, you had to know at some point they were going up.
This guy's good, right?
I like him. He did the clapping thing. We know to start.
Yeah, he's good. He's good, Robbie. This is life. These content creators. By the way, content creation is like the new lawyer, the new doctor. They're like so high in demand, these people. It's crazy.
It's a skill for the new market economy. This social media didn't exist. The way social media existed for a while. It didn't exist in this form. It didn't even exist 10 years ago. Forget 20 years ago or 30 years ago, right? So there was a certain skill set that makes this work. And people who have that skill can make it work as a business.
Yeah,
It's amazing.
It's amazing because you don't need college for it. It's really a creative job, you know, and it's a game changer because the college economy is just it's changing every day.
Every day, right? So the more traditional things, like I guess when I was in college, you had to get a corporate job and you had to go along that route, and like an entrepreneur was something that only that guy did because he was a special thing. But now there's so many things you can do as an entrepreneur today. It's an incredible, this, what's it called? This Chat GPT.
Yeah.
My son knows, you probably know all about these things.
I was featured in the New York Post yesterday.
I saw
about
that. I did see that.
Yeah.
That's right. Right. That's right. I did see that. So even that, it's a whole new thing. That's, I guess, brand new. Maybe it's
it's brand new.
like a brand new. Who knows that? You can write a whole dissertation on that thing. It's incredible.
Nobody ever thought something would come out to challenge Google until Chat GPT was released.
Until it did, right? Until it did. Yeah, I don't understand it. My son gets it. I'm sure you get it, but I'm sure there's a lot to do with it. I tried to use. I was like, I'm not doing this.
Well,
right?
think about it this way: if you went on Google and you typed in a question, right? There's a list of answers that you click on and you begin reading.
Right.
And what's brilliant about innovation is that it cuts out steps, right? So like now I could go on Google, I could look up Equities, right? I hear about a lender. Now I have your information. I can find it through there. I'll call you. Boom. It's what, 3-4 steps, right? I know you can't find people on Chat GPT, but in the past, I used to have to I have to buy a book, the Yellow Pages, right? I have to go through the book.
I do remember the Yellow Pages.
Yeah, I have to go through the book and hope that you still have that same number.
Right.
When I get the number, I have to call you. I get through to your secretary, get through to you, right? So innovation cuts out steps, and what Chat GPT does is it cuts out steps that even Google can't cut out yet. So now if I look something up on Chat GPT that I look up on Google, I have a direct answer.
It's really incredible. And my son's been showing me this over the last couple of months. I'm like, wow, this is crazy. Like, and it really is. I opened my own account and I started typing some things in there and asking questions, and it just comes up with these long answers that I guess are mostly right, let's say. Maybe there's some quirks that doesn't work here and there, but if you could figure that innovation out, you will be able to make, a successful career out of it.
It's incredible. It's incredible.
Amazing.
I hired a lawyer, and I'm like, hey, give me an operating agreement. I just want to see an operating agreement. Give me a template that you would have me fill out. And I've been through 30 lawyers. I have hundreds of operating agreements. I've signed 80 of them already. So I've seen them, and I'm very understanding of an operating agreement. I could draft a better one than a reputable attorney. Let's just put it that way. So I take their template, and then I write in Chat GPT, write me an operating agreement. And the Chat GPT operating agreement comes up within 30 seconds, more thorough than the legal template that I got from the lawyer.
It's crazy.
And I got a lot of backlash on this because I voiced that on social media. I said, hey, Chat GPT can act almost as good, if not better, than a lawyer, than an attorney. Yeah. Then an attorney that passed the bar and has their license. ChatGPT can act as a better attorney than them. And people were telling me, you're a fool, you're this, you're that. And I'm like, well, I did a test. I actually tested it. And
it came up with a 30-page document.
It wasn't 30 pages, but it wasn't a one-pager, and it was more thorough than the one I've got from maybe 4 different attorneys. So you're telling me, okay, maybe if I took 5 attorneys, 10 attorneys, or a Manhattan attorney that'll charge me, $5,000 for an operating agreement that I could get on LegalZoom. Okay, maybe they'll have a more thorough agreement. And maybe there's things that we're missing and all of that stuff. No question, right? But if I could draft a templated operating agreement for free in 30 seconds, how much money could you save?
That's crazy. Right. So somebody my age can't figure this out, nor will I try to figure it out. Like, I have to go to my attorneys because I just can't figure it out myself. I'm not doing an operating agreement on ChatGPT. You're the new generation. If you can figure it out, it'll benefit you. Me, we still pay the attorneys because that's how we grew up and that's how we do it.
Don't get me wrong. I don't want to.
Crazy.
I don't want to seem amateurish when I say that because I agree with you. I still hire attorneys. I have no choice, right, with the people on the other end of the deal. But I understand how many solutions that software can solve.
It's amazing. Yeah, I looked at it recently. It's phenomenal. I don't know who invented it, but it wasn't me.
Yeah.
It definitely wasn't me.
Pretty sure Elon Musk was an investor.
Oh, was he?
Unsurprisingly.
Is that right?
Yeah.
Well, who did start ChatGPT? Like, who are the 2-3 main
I have no idea.
day-to-day guys? Like, it's got to be somebody running the show there.
I never looked into that, but I know Elon was one of the investors. I know Microsoft's about to invest $10 billion
$10 billion.
into them. Yeah.
Into ChatGPT.
Yeah. For some sort of equity arrangement.
Are there any competitors to that now, like that have done the same thing, or it's just them?
Apparently there are competitors. Apparently there are, and apparently ChatGPT 4, version 4, is going to be 1,000 times more successful and have more data sets than ChatGPT that we know right
Version
now.
4. When did version 1 come out?
It probably wasn't released to the public, but I'm guessing right now. I'm not too familiar. But yeah, you see also, Elliot, to touch on what you just said before, you're old-fashioned, you go to the lawyers, you're also stable in your career. You've also been around for a long time and you have money behind you. A lot of the people listening and a lot of people that I come across every day are amateurs, they're beginners, and they don't have big bank balances or a lot of money behind them. So for somebody simple, with $8,000 to $20,000 in the bank trying to buy a house, having the ability to go on a website and get so many things that would cost us $10,000 to $20,000 to gather, it's amazing.
That's a game changer. It will help people. Again, I don't know exactly, but it probably will help people get a leg up on certain things that they couldn't have previously.
Yeah. Oh, I wrote in there, give me topics to talk about in the real estate space, just ideas. And the ideas that it was spewing out, I was like, oh my God, I've never spoken about triple net investing. I've never spoken about why industrial is a superior asset class. Ideas that I didn't think of. Right. I thought it was brilliant.
It is brilliant. You are brilliant. Come on, pat yourself on the back. Come on.
Thanks. I give the credit to the software, but I will take it. I'll take it. And you know what? Before we wrap up, I want to ask you something about real estate that we briefly touched on before.
Sure.
And when we were off camera, we joked about it a little bit. But how do you lose money in this business?
Very easily, right? So the answer is there's two ways, right? So one way is by getting over leverage, right? Now, leverage works only when it works, and then it doesn't work the rest of the time, right?
And this is coming from a lender.
From a lender, right. Well, I try not to be too over leveraged in my lending, right? Now, I've made leveraged loans to very sophisticated people who can handle it, right? Now, there are two types of borrowers who can handle leverage. Those who can and those who can't, right? And that's it. There's no in between. It's completely binary, right? So everybody has losses, whether you're in the real estate business, stock market, venture capital, whatever, commerce, you're in industry, you're selling T-shirts for a living. Everybody, has losses. Yeah, the way to handle losses is simple. You got to get out. You're done. When something's wrong, move on. Cut your loss and go. Whoever came up with that thing, cut your losses, whoever came up with that saying was right. We had a situation a couple of years ago where we were behind in construction. And I said, you know what, guys? We bought these 2 small buildings here in Miami. We tried to buy 9 more because we wanted to get some scale in the neighborhood, right? We never bought the 9, so we now we're stuck with these 2. I said, these 2 are becoming a problem. Why don't we just sell them? There's too much distraction, too much money. Let's go out of it. Let's move out of it now. Anyway, we decided to stay. We went along the business plan, and we lost money, right? So then we said, once we started losing money, we said, you know what? There's no point feeding more money. Cut the loss, move on. Cutting that loss was the best thing we did because it took us away from the distraction. We had a loss. It took us away from the distraction of following up on the loss every day, 4 people every day trying to figure this out, pumping in more money, which may or may not have become successful down the road. But we made the decision, sell. We sold, took the losses, moved on, bought another $100 million of property because we were so focused on those 2 little buildings that were driving us crazy. It took away all our energy from doing other things. And once we cut that, we literally bought $100 million of real estate in the next 9-ish, 10 months in New Jersey, where we were supposed to be buying real estate.
Cut your losses fast.
Cut your losses and realize you have a loss. You don't have to be right 100% of the time. People always somehow when it comes to investing, not just real estate, anything, people think you have to be right 100% of the time. So if you have a mutual fund and you've made 12%, that doesn't mean you're right 100% of the time, but you don't realize you've lost money on other investments in that mutual fund. Some stocks went up 35%, some went up 40%. Some went down 10, 12%. So within that mutual fund, you've still lost some money. But when people have a one-off investment, they bought a building wherever, and now it's not working, sometimes just move on, cut the loss and go. And truth is, when I was a stock trader a long time ago, we took losses daily. We were taking losses every day of the week. The best traders took the best losses quickly because it was liquid. You were able to get in, get
Yeah.
out, right? Those that had disastrous losses, they'd buy something at whatever, 80, and now it's 70, and now it's 60, and now it's 50, now it's 41, and they sell it at 30, and immediately goes back to 42. You know, so
Yeah.
you have to know when something's wrong. You have to have an instinct that tells you, I am wrong, I want to get out badly, and then execute on it. But most people are afraid to take that loss, and you really shouldn't be, because it frees up your mind to do better things.
You have my mind thinking right now. Elliot, cut your losses and go.
Cut
Boom.
your losses, go on with your life. Because if you keep beating yourself up over it, you'll never get over it. And I've had stock market losses, personal business losses, real estate losses. But overall, thankfully, we've made money with people.
Oh, man, I'm going to make a call after
Thankfully.
this. I have one deal in mind right now. I'm like, should I just cut my loss and go? Elliot, I think this is good advice.
If you can't figure out in 20 seconds how to make that work, cut your loss and go.
Yeah.
Now, if
Well
you have
said.
investors, it might be a little different. You have to talk to them maybe. But generally, we had investors we spoke to. But you have to figure out, is it worth the time and energy to turn this property around? And can it realistically be turned around? If you can't answer that with 100% certainty, you're probably better off. I don't know anything about it, but you're probably better off moving on.
Well, Elliot, this was awesome.
This was great. Thank you for having me out here. I left Brooklyn to come to Long Island. It's amazing.
I'm so happy you came out. It was
Thank you so
a big
much.
deal getting you out of that bat cave.
I appreciate you getting me here. Thank you so much, Alon. It was great. Thank you. I
Good
really
man.
appreciate it.
Good man.